Good afternoon, traders. This is Christian from Hertz Traffic and Trade Group, and today is Tuesday, October 11th, and this is your end of day market recap. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're discussing is for education purposes only. So what kind of a day did we get? Well, there's a couple different days, depending on what time of day it was. Really, kind of the momentum of the day really changed significantly once we got these comments from the Bank of England. They had talked about purchasing bonds and being kind of stimulative in terms of basically trying to take some of the turbulence out of the market. By going in and purchasing bonds. Well, the statement that was made earlier, and this was right here, just these three little comments on Bloomberg. Bailey says innovation in markets will be temporary, says we will be out by the end of the week. And message to fund is you've got 3 days left. So how about that for, what time was this? So this was right around like 2 o'clock for the day. So let's go into this. And again, I'll talk about some single names in this, but this tape is right now, the tape that we're dealing with right now is so macro related. It's so big picture in terms of what interest rates are doing, what currencies are doing, that everything else right now is secondary. Now that might change eventually, but I look over to the left of my screen because I always have the VIX up on one side of the screen. Right now, again, and this has been the same thing all year long, but on one side of the screen somewhere you should have what the VIX is doing, what bonds are doing, and what the US dollar is doing. Those have been must watches all year long. Because that's how the tape has basically been moving. Either one of the other is really causing the market equities to fluctuate based on either what bonds are doing, what the US dollar is doing, and then the VIX tells you as well what the picture of overall volatility is. So right now we hit a VIX, and I'll move to that quickly, and then we'll go back to the day's events. But let's bring up the daily chart right now. So we're kind of back to where we were. The highs right at the end of September, but we're pushing again 34. So the main thing when we talk about the VIX is not to go over the chart patterns. Some people are into that type of thing. I can tell you from being a trader for now a number of years. I started my career right around the .com bubble. It's the level of the VIX that's important, because again, what does the VIX measure? It measures short-term implied volatility in the S&P. So that's all that it measures, right? People like to refer to it as the fear gauge, the fear index. It's not, guys. It just tells you what S&P options, short-dated S&P options are pricing. And the higher it is, the more volatility that is being priced in to the market. So 33 right now is no joke, right? And we talk about the implications because I know, and again, I'm not criticizing, I'm not saying anything bad, but sometimes retail traders, they just want to do what they want to do, and they don't want to have to worry about some of these things. But really what happens is if you're not making adjustments to what the market is doing, you're opening yourself up to bigger risk, right? And bigger risk sometimes means bigger losses. Sometimes people like the volatility, right? It's very good for day trading. So I talk about when the VIX is high more as risk, because I'm more of a swing trader. Day traders love volatility, right? Because they don't have to wear any risk overnight, and they can actually make some money because of the swings that are happening in day to day. So it depends on your style. If day trading is what you do and what you love to do, then you like that volatility is very high, because you can play, and if you're playing both sides of the market, you don't necessarily care if you're a pure day trader. You're just following incremental moves. Swing trading is a different story. Swing trading, you do have to worry about the risk, because if you're on the wrong side of the market, you come in and the market's down 1%, 2%, or up 2%, and you're short, you're in big trouble. But the main message here is to understand that level of volatility means there's a lot more risk. Remember, the VIX, I will go back and I will do this really quick. Sorry to get sidetracked. I do this a lot in these videos to get a little bit sidetracked. But remember, we're at a 33. For a while, we weren't even around, for a good portion of time, the VIX was hanging around between, 10 to 16, which is not normal either. What's normal for the VIX is 20. So the volatility is much higher than normal. Back when we were, back in, I think this was 2017, 2018, when the VIX was this low, right? We had a very trending market, right? We were basically just trending, trending higher. So two different types of markets, a lot more volatility right now. Let me go back to that 5-minute chart here in the S&P. But yeah, I mean, we were kind of, we did kind of stall out for the day, which is quite normal, given that we've got some big events that are happening this week. Tomorrow is the PPI report. All right, so again, these are the main events for the week. All right, so let me just go up. I'll bring this up. I want regular releases. Tomorrow we've got the PPI report, so that's the one gauge of inflation, and then everybody will be watching the, so this is important. I don't mean to downplay this, but Twitter loves the CPI report. So everybody will be looking at this. The market will move on this. When I priced out, I didn't see where index options were pricing for the week, but when I checked yesterday, the Qs were pricing in a 3.6% move for this week, and the S&P was pricing in 3%. That's because of these reports, right, that we're going to be getting. So a lot of implications. We have, the inflation numbers have been stubborn. So, it'll be very interesting to see if this number finally comes in a little bit lighter than expected. If it doesn't, right, we went through these scenarios in our midday video, but you kind of have to go through a scenario analysis in your head in terms of what's going to happen. If the number comes in hot, the equities are going to sell off again. That's the logical move. Now, there's nothing 100% about that, but probably we're going to come in and I would assume we'll take out the lows and take out at least one of these VPOCs. Maybe we take out this one too. All right, until this, and again, it provides, if we don't see this inflation come down, right, it's just pushing out time further, and we'll probably see lower prices if the inflation does not start to tick down. Considering how much the Fed right now is tightening, and that's the other thing, right? So again, these are all things that we go over. I apologize to be redundant, but these are the big issues right now in the market. So, another 75 basis points is what's being priced in for November, and then another 50 basis points after that for December, right? That's a lot. We're already at 3.25. This would basically get us to almost 4.5% if they follow through with another 75 basis points and another 50. Now, of course, the path of this could change if inflation comes down. If it doesn't, right, and we don't hear much really change out of the Fed, then we're looking at rates going to 4.5%. Again, it's very significant. I was tweeting about this last night because I don't think people really fully grasp that how much this move has happened. And again, I keep going to the 2-year rate, but you can get, and again, I'm not going to go into this for that long, but yes, you could get yield other places, and that's a big thing. Sorry, I want the 2-year. Right? I mean, that if this doesn't shock you, right, and realize that the world is turned upside down, you go back to where we were in the beginning of the year, and a 2-year bond was getting you 0.5%. Right now, it's getting 4.3%. So the world has the overall world, the market has drastically changed because of what yields have done. I mean, that's 400 basis points, from the beginning of this year. So I think it's funny that people are looking at rate sensitive equities, such as REITs, which is IYR, VNQ, XLRE, which people like to call real estate. It's not really real estate. It's real estate investment trust, first of all. But people are looking at these things, and as well as utilities, as well as a couple of other of the interest rate sensitive areas. And they're like, gee, they're really going down a lot. Well, it's because interest rates are going up so much. A lot of those things for years, and we've been kind of numb to it. We haven't really remembered why people go into REITs and go into utilities. That's not the only reason why they go into them, but it's a good portion of why investors go into them is because they're trying to get yield. And you haven't been able to get yield in the primary place, which is the bond market, until recently, until this has gone on. So what this means, so if you look at these charts, and again, people are like, oh, geez, look at it break support, like in IYR. Well, of course that's going to happen, because you don't need to be in those things to get yield anymore, right? You're carrying extra risk, right? And I've talked about that, for the last couple of weeks, just about every day, about how big this move in interest rates is and why you don't need those things currently. Now, that might change, right? What might change this move that's happening in yields is if the inflation starts to come down. Okay, so I wanted to bring your attention to a particular trade. But by the way, like, so today's price action, like that's what this, this move in equities was all about. Was if we looked at what the dollar was doing and we looked at what interest rates are doing. So again, I always look at the long end of the curve, but you could see bonds were rallying for once. And then once this information came out from the Bank of England, everything started to slide, right? Look at what the British pound did. Right, so this is where the British pound was trading before these Bank of England remarks came out, and it absolutely crushed the British pound. And then of course, what does it do for the US dollar? Right, look at what the US dollar, and the US dollar was down all day. Right, so that was also one of the reasons why equities rallied today, is because you didn't have that headwind of the stronger dollar. But immediately once that happened, right, and go back to the British pound, right, look at this, and then look at what equities did. Right, so again, it's not the whole move, but as that volatility cranks higher in those currencies, it's the same chart, or it's almost the same chart. So a lot of what's going on right now, the moves are being responsible for these macro effects, whether it's what rates are doing overseas, what central banks are doing overseas, or what the Fed is doing here. For now, they're the ones that are controlling all these markets, right? Until things change. So I wanted to point out one trade, and then we'll talk about, like, how do you trade this market? This market in 2022, it's been extremely difficult. So here's a pretty big trade. This is in TLT, right? So TLT, right? I always look at 30-year bond futures. People get mad at me on Twitter because they're like, "What's ZB?" Well, ZB is the symbol in Thinkorswim, which is the system that I use. But TLT, right, has a duration, because it's holding a bunch of different bonds, of about 18, right? So it's different than 30-year bonds, even though, so again, that's the duration, that's the average of maturity of what they're holding in this ETF, even though it says plus 20 years, right? People think plus 20 years. Well, it's actually, the duration is about 17, right? Now, so let's take a look at this trade that went up, right? So which is the one that I'm looking for? It's this big print, 9.4 million shares that went up. 9.4 million shares, right? So how big is that? Well, that's about $1 billion trade that went up today in TLT. So why would they do that type of trade? So you begin to kind of think about that. Why would somebody be trading $1 billion of bonds today? Well, and so first of all, is it a buy or is it a sell? Well, so this is what's called, not to get off the beaten track here, but this is what happens sometimes. Let me just bring this up again. What's the screen that I'm looking for? There's this, and where's my, oh, here it is. It's right here. All right. So yeah, close to $1 billion. So first of all, was it bought or sold? Well, so this is a block trade. Please don't give me this garbage about dark pools. This is not a dark pool print. This is a block trade, right? So this is an out loud, somebody's looking to put on $1 billion trade. Do you think that they're going to trade this in the dark pools? No. you don't trade $1 billion in the dark pools. I always get excited when I hear people say dark pools on Twitter, because that means that they have no idea what the hell they're talking about. Sorry. But it's a block trade. Right now, it does get these modifiers on it, which trick people on Twitter, because they're like, oh, it's in some reporting fee that they're getting. It says, oh, it's a dark pool. It's not a dark pool. So it's a block trade, right? So let's say hedge fund or pension, right, who wants to buy $1 billion. How are they going to execute that? Well, they're not going to stick it in an algo. They're not going to trade it electronically. They're certainly not going to trade it in a dark pool. What they're going to do is they're going to call up Goldman. They're going to call up Morgan Stanley. They're going to call up any one of these big banks where they have a big trading desk, and they're going to say, hey, I need to trade about $1 billion of TLT. Show me a market, right? And that risk trader, that block trader, this is what I used to do on an institutional trading desk. They are going to figure out how to hedge this, probably using futures, and they will go ahead and make the institution, whether it's a hedge fund or pension, whoever, and they will make them a market where they can actually buy or sell about $1 billion of treasury bonds. So take a look at the print that happened. Now, first of all, what time did it happen? 12:32:52. So let's go to the tape and then look at the price, 110.77. Right. This is how you investigate a print. So let's go to 12:32 and look at the price. Now, was it in the context of the market? No, it wasn't. Right. They actually printed this above the current price. So what does that tell you? That means that they gave them a price and they said, hey, I'm going to need time to basically execute $1 billion of bonds. So they gave them a price a little bit away from the market, right? So the market was probably trading around like 70 cents. They're like, hey, well, you could get done on this $1 billion at 77 cents, a little bit away from the market, because the broker needs to hedge that kind of risk. So they're giving seven cents of room, or maybe it was a little bit less than that, 6 cents, 5 cents. And guys, this is how trading gets done on a big scale, right? So please, it's not a dark pool print. All right. So the broker said, hey, you could get done. You could buy $1 billion about 5 cents, probably was a nickel away, because that's how ETF traders trade. It was a nickel away from the current price. The hedge fund says, or the institution says, fine, I'm done there. And they own them at 77 cents. What happens then is the broker prints the trade and they print it a little bit away from the market, and you see a blip on your screen as of this, and that's your execution. Let's see if we could figure out who traded this really quick, because I forgot to look. Where is my screen? One more time. Sometimes somebody advertises it, right? And it could have been JP Morgan. So these are all the brokers who executed. It probably was JP Morgan, right? It could have been Virtue, could have been Morgan Stanley, could have been BofA, Bank of America, Merrill Lynch, anybody who traded over 1 million shares today. But regardless, okay, so let's get back to what's the motivation for that trade? Well, let's look at what TLT has been doing, right? TLT's been doing this. So finally, somebody says, hey, this has gone down far enough. This is a good spot for me to own some TLT. Now, they could either be price sensitive and saying, hey, it's gone down this much. I want to be a buyer down here I want to own some TLT all the way down at 100. The yield has gone up enough where I'm happy with it. They could also be making a play on the inflation data that comes out this week. Because what do you think is going to happen this week, right? Well, let's talk about that for a minute. So again, this is the scenario analysis that we do whenever we kind of talk about what could happen, right? If the inflation data comes in higher than expected, I'll bring this screen back up if I can. I don't have it. If the inflation data comes in higher than expected, what's going to happen? Well, probably bonds are going to continue to sell off. They've been doing that, for the last couple months because inflation has been higher. Right. So that's the major driving force, right? Interest rates will go higher and higher until inflation comes into check. All right. So if the number comes in higher than expected, probably you'll see TLT go down. Right. That means interest rates are going higher. That's more of a headwind for equities, and you will see equities sell off. OK, if the inflation data comes in lighter than expected, what will happen to bonds? They'll probably rally a little bit. You don't need that super high inflation rate when inflation is not that high anymore. So bonds will rally, their TLT trade will do pretty well. And then what will equities do? Equities will probably start to rally because interest rates are not that high. Remember, the higher that interest rates go, the more of a headwind, right, it is for equities. All right, so that's my 2 cents on the block trade and what could be the motivation behind somebody buying $1 billion of TLT. All right, in terms of trades. All right, so looking at the technicals and the S&P, and guys, again, this has gotten like boring at this point. Looking at the what's going on, it's the same story, right? Price, for the last couple days, right? We've drifted. Oops, whoa, trippy. We're not going to analyze this to death. Right, it's the same thing. We were onto something in here. Price got above or inside the value area for the month. On the jobs data, again, that's another example, right? Jobs number comes in stronger. What do bond yields do? They go higher. TLT goes down. Equities go down, right? Because of the inflation at this point, right? The inflation is the driving factor in why everything is moving. Yeah, so we broke back below the value area, and we're below all these moving averages, downtrends, weakness. That's what we have going on in this market, and the market is trying to fight. And every time we try to reverse, right now the market's not able to do it. We need to see something change, right? In terms of some of the inflation reports. That's what's going to move this market. So there's a VPOC down here. I would say one thing that's kind of interesting right now is the small caps and the mid caps, right? The small caps, they did not stay in value either. Again, look at how close it is, right? If we closed around the highs, we retake the 5-period moving average and we get back inside value. This market's just not ready to do that yet, unfortunately. The mid caps are showing some signs of life, right? They're a little bit stronger right now than the small caps and the large caps, right? This is in value, but still it's below the short-term moving average, right? The market action cannot get over cannot retake the short-term trend right now. So we're stuck until things change. How to trade this market, right? That was one of the questions that I posed earlier. It's being really, really light. I was talking to a couple traders after hours, and they were asking me a couple questions on a couple trades I had on. And this is one that I took off. I put this trade on. I kind of wanted it to be a swing trade. I like this GPC, and I'll go through a couple other things. I mean, it looks pretty decent, right? This has been a strong name, very strong name. However, it's not worth the risk right now. The VIX is at a 33, right? If I was able to take a target on this, then I would have, held on to it. But it's not worth it. You could come in and your stock could be down $10 because of, something that comes out in the overnight session. So so right now it's the same thing that we've been talking about now for the last few months. It's just being nimble, being aware that there's a lot of risk. Trying some trades. I mean, I'm here present, I'm here every day. So I'm going to try some trades, having a hedge on here and there. This worked pretty well. I put this on even late on Friday after the jobs numbers, and I put this SQQQ on, which is 3 times short the Qs, and this worked really well. So just riding the trend down. I did take this trade off because I don't want a lot of exposure into these 2 inflation reports, one tomorrow, one Thursday, and we'll kind of go from there. But, and this is why you have to take targets too. I took 2 targets today in this WWE, which looks like a great looking chart, right? I'm sorry, not head, cup, handle, and out to highs, right? The insurance names are all acting very well. This name that I just, what's the name of this thing? Is it IRDM? Is that what it is? No, PLMR. I get the symbol confused all the time. Look at this name go up, right? And a lot of the insurers went up. PJR, Progressive, right? Again, did not close positively, but whenever this market stabilizes, these are the things that are showing some strength. PJR, and then you could go through the list, but UNM, there's like 5 of these insurance names. They're all showing some strength to them, but I like that PLMR, very, very strong. Also, you can go back to, healthcare. That had a good day today. So things like VRTX, which I try to trade a little bit. I took this off last week. I went back into it. I recognize that it did not get out of value. Right. So here's my entry on VRTX. I took a target here at 300, as I said I would in the room. And it just wasn't doing what I wanted it to. So luckily I actually took this one off, still for profits before the big whoosh happened. And a couple other trades that I put on an AEHR starter. So just a starter position, but clearly, it didn't hold up the way that I saw it holding up earlier in the day. Nevertheless, 1550, right around 1550 is what I want to see hold. My stop on the trade is 15. So again, it's been showing some nice strength in digesting some of those earnings moves. All right. What else? GPC, also Regeneron was another one that was out of our weekend watch list name. Nice little hold here, bullish engulfing. I think we went over this in yesterday's video. This was up almost 1% for the day. Merck had a nice day as well. I think Merck got an upgrade, as well as there's a couple, Amgen got an upgrade today. So there's some nice strength here. This thing did run into a version point of control. Also, just a couple other things. Texas Roadhouse, TXRH, I think it is. One to watch for tomorrow. Right, watch for a break out of this week's value area. That's right around 91.40. One other name that I was watching too, one that's probably not on your radar, but GTLS. This is Chart Resources. Right, they do a lot of things with equipment, like energy equipment, as well as chemicals. Watch for a break of 203.49. Again, it got rejected, so I'll go back and put an alert on it. I have no position in it, but I'll be watching this one, see if this one can break higher. All right, guys, that is it for today's video. Again, going over a lot of concepts. That block trade, very interesting. It'll be interesting to see if they're right with $100 billion trade. But they, by the way, they could also be looking at something more longer term than than just looking at the inflation data this week. They can maybe think inflation comes down in a month, a month later, rather than just this week. Right, eventually, and that's another thing to kind of keep in perspective, guys, and that's probably a great place for me to end the video. Keep things in perspective. Inflation is not going to be this high forever. The market's not going to be going down forever. I can't put a timeline on that. And that's the $1 million question, is when is inflation going to come down, and when will it stop affecting everything in our lives? Not just trading, but everything in our lives. And that's the $1 million question, but eventually it will. I mean, there's no question about it. You just kind of have to be patient and wait for that to actually happen. Then of course, try to pick the day that it's going to happen. All right, guys, have a great night. See you tomorrow.